Afternoon. How are we all doing? Afternoon, Ian, Christian, Steve, Danny, Crum, Gregors, Julio, Evil, David, Baggy, JC, another David, Evans, Mark, Rico, Day Trader, Yarp. Afternoon, Yarp. Hit the like so I can enjoy my weekend. Don't be a bum. Use that thumb. Smack it. That would be good. Right. Afternoon, Alistair. It's time. So, yeah, news came out. Obviously, big news. So, the unemployment rate went, stayed where it was. So, it didn't go up. They were forecasting a 0.1% increase in unemployment. We got a 3.7. Naturally, the US dollar went through the roof. Non-farm employment up, obviously because the unemployment rate hasn't gone up. Employment has gone up because unemployment hasn't gone up. You know what I mean? It's all good. We got UOM at 3. So they may well undo the entire thing, but obviously US dollar, big move. US dollar Swiss, obviously everything's just gone up. 125 ADR pretty much across the board. 150 on US dollar yen. Euro US 150. Pound US I think was 125. So yeah, lots of movement. So ADRs across the board everywhere. I'll be getting into all these reversals. Assuming we get some reversals, obviously, because it's going to be quite tight getting into these. Some of them actually not too bad. Very tight. So if University of Michigan numbers come out and they decide, nah, screw it, let's go back the other way, we could be out of all of these today on a lovely big V-shaped recovery, but we'll see. So yeah, loads of ADRs. I'm not going to go through them all. You know why they're all hit, because it's news. So they're all opportunities for mean reversion. The further they get stretched, the bigger that pullback's going to be. Yeah, exactly the same as that. Yeah, that's what it does. Up and down, up and down. So this is still running at the moment. So the US dollar is still powering up. So wait for the reverse alerts. Don't just jump into the market. Wait for reverse alerts to trigger you in. I've banked 0.25% today. Not a lot. Which was an Aussie dollar CAD from earlier. So I got out on the Aussie dollar CAD up here before the news, in case obviously it did that, which it did, which is why I got out, because it's better in my bank than in drawdown. So took that one off. Nothing else to bank there. ADR reversals banked 2.57%. Basically, pretty much all the ADRs from yesterday, I'm out of all the ADRs from yesterday. So very simple. US dollar CAD out, pound US out, US dollar Swiss out, Euro US out. What else we got? New Zealand CAD out before the news. Again, out because the news was coming. Didn't want it to go into drawdown. Yeah. So out of that one. And Aussie dollar Swiss. That was earlier this morning. So I covered this one in the live room this morning. So I was out of that one. Out the Euro odd, out the Aussie CAD. Basically out of everything. Flat. Apart from Euro CAD. That's the only thing I've got left on now. Which I've got longs on. So we'll be getting into loads of new positions today when we start to pull back on this move. So all good. Also, yeah, sorry, and banked 3.28% on H1 hedging. So up 7.48% on the month. We're only on the second. So 4.7 drawdown, up 7.5. So good month, February so far. This morning, the FTSE was a clean break to the downside. Straight in, straight out with one position. Hedged on the DAX. Still got the DAX hedge on because the DAX obviously hasn't gone anywhere. as we expected. News, we don't do anything. So we're just waiting for the DAX still to do something. Targets are at ADR on both of those. And we'll see how we get on with the US. We've got 3 minutes to the open. So that's the University of Michigan this afternoon at 3 o'clock. Market might hang around for that. We'll have to wait and see. Other than the non-farm and unemployment rates, there wasn't an awful lot of news this morning. So no longer fully priced in May rate cut. Assign lower odds to March rate cut after jobs data. So basically, it's just a confirmation of what was said by Powell on Wednesday in FOMC. So we are going to put the rate drop back probably until May, unless we get an uptick in unemployment, in which case then we might do it further. Today, it didn't tick up. Therefore, it confirms the May move, which makes it bullish because we know we're not going down for 3 months. So it's not massively bullish. It's definitely not bearish. More neutral for the US. So as far as the market's concerned, it's good news today. But at 3 o'clock, when the University of Michigan numbers come out, they might go, yeah, it's not as good as it was earlier. So it's just a big news spike. I wouldn't read anything into it. It's just a spike. That's what we happen. That's what we get in it. We had a spike yesterday. We had a spike the day before. We had a spike there. We had a spike there. We got a spike here. We're going to get a spike there. Let's wait. Right. So we'll see how we get on with the US this afternoon. Might be a tricky session because obviously we've just had this whacking great move. But we will see. See where we go. We've got 5 seconds to the open. No, we haven't. We're open. So we're off. Long on the S&P, long on the Dow. No break yet on the NAS. Watch them just undo the whole lot. 26 likes, that's not enough. There's 70 people in here. 35 is a minimum. Come on, hit the button, or otherwise I'm not showing you any charts. Right, just doing something over there. I won't show you charts. Afternoon, everybody else. I haven't said an afternoon to Google, Matt, Kennelly, Day Trader. With ADR reversals, the entry signal is only valid until end of day. Yep. It's a scalping strategy. So tomorrow, so basically if you get an ADR like this, yeah, and then price does this, it's not good doing that. So the idea is we are super stretched. We want to come back down again. So if you get super stretched and you accumulate, you put a massive propulsion gap in, the chances are that is a fundamental shift, which is going to take the market further. So can I see who's pressing the like button? No, I don't get to see anything. I get to see the same as you. That 41 out of 81. So that's okay. That's half of you like me. I'll live with that. Half of you. Don't know why the other half don't like me. Only try and make you money. Short on the NASDAQ. It's looking like a hedge day to me. See where we go. So there's obviously from an analysis point of view today, anything you see that is extended is obviously due to the numbers. Whether they continue this on for a couple of days, we'll have to wait and see. It's not massively bullish for if the unemployment numbers had come down. I would say, yeah, that is probably very bullish for the US, because it would mean that they could actually put the rate drop back from May a little bit further, couldn't they? But we got another 3 months worth of data to come out. So pushing up basically is the name of the game, obviously off the ADR reversals. So any of these are fair play for a pullback at some point, but just wait for these all to slow down. So they're all dropping at the moment. Wait for some signs of bullishness to come back in. The market will get tired. It will exhaust itself. And then you'll start to get reversal alerts triggering. And then either this initial propulsion move will hold and will rally away for a day or two, and then they'll come back and retest it at a later stage, in which case, obviously, then if you're getting short there, you'll get short again next week. Or they won't, and it will be an A-shaped recovery in this case, or a V-shaped recovery in the rest of the cases. So there's no point in going through every one individually. They're all the same. It's the same play, basically. Massive news spike, wait for a reversal. It will or it won't undo it. And deal with it if it doesn't. RSI extensions, there's nothing got extended off of the news so far. Give it until 3 o'clock when the hourly candles close, and you might find some of these are ADR hits. They may not be, actually, because we've obviously been pushing in the opposite direction. So it's going to take a fair old whack to get these down below those levels. So might not be any entries off of these, because everything is kind of range bound, isn't it, at the moment? So might not get any new entries. You're not going to. So there's nothing hitting RSI. So you're not going to get any RSI entries today at all. Look. No. Here we go. So you're going to need this move to continue for a good 2 or 3 hours to get any kind of RSI extension for an opposite direction entry. And if it does continue for 2 or 3 hours, take it, because that thing is stretched to crap and it is going to ping back. So I wouldn't hesitate on jumping on any of these at the moment. Right, see where we're going. So rejection to the upside on the Dow. S&P, complete deadstone doji. So nothing at all on the S&P. The Dow has pushed up and rejected the highs, and the NASDAQ is hedged. Is going both directions. So just about to get hedged on the Dow by the looks of things as well. Why is it Fridays? Every bloody Friday is a triple hedge. I can just foresee it happening. It's going to happen, isn't it? It's going to be a triple hedge day. Bear with me one sec. Did you focus on closing US dollar and CAD pairs before the news? Yes. Yeah, that's why I banked so much today. Well, not why I banked so much today. I banked because, obviously, the news. US dollar CAD 125. Still going. So banked, obviously, anything that was bankable before the news was banked. Always do that, always. Because you'll lose it otherwise. And anything that obviously spiked ridiculously over an ADR in the news, I banked. So that's hence all this lot. You'll see that all of this is all banked within minutes of each other. So 335, 336, 357, 405. Obviously, this is in the future because my broker's 2 hours ahead. But just banking it as it's getting to target or getting close to target. Just stick it in there because these moves often undo themselves. Go and look at previous non-farm payrolls, previous FOMCs. Yesterday's a prime example, isn't it? Look at yesterday's FOMC. Sorry, this week's FOMC. Look, bang, bang, same day. We went down, we came back up again. So if it's gone up and you're out, just get it in the bank. Yes, it could continue up to 200 ADR. If so, I'm out far too soon. If it goes down, I'm out perfectly. I have no idea what it's going to do. Unless you can see into the future, I have no idea if this is going to hit that top and come down, whether it's going to go to 225 and go up to here today, or it might just collapse all the way back down to there by the end of the day. I don't know. But what I did know was that I had $700, so I took it. All you can do is you don't know which way this is going to go and what it's going to do for the rest of the day. So that's not bad. That's better. More time machiney, isn't it? It's kind of got a Stargate vibe to it, isn't it? It's got glyphs around the side. My prediction is the market will go up and then it will go down. That's pretty much spot on. I love the red jacket. And look at the hands. Slightly. Do you reckon that's from pulling the trigger too much? Look at his trigger fingers. They're like longer than all of his other fingers. That's not bad though, is it? That's better. That's a much better time machine one. We'll keep that one. Oh, by the way, hedged on the Dow. S&P is my only saving grace today if we get a rally back up. So absolute whipsaw so far on the Dow. I wouldn't be surprised if we just sit around here until 3 o'clock. So I think there's someone in the indices, someone in the group said they don't trade indices on Mondays and Fridays. That's fine. Absolutely fine. So the days on the Mondays where you make 6% because it all clean breaks and everybody makes a fortune, they just won't make it, will they? There's absolutely no correlation with days of week. Try it. Go and test every Friday and see what happens. Random. Some Fridays are clean breaks that go mental. Some Fridays are whipsaws. Some Fridays half and half. It's random. No correlation. Look at the Friday. Look at the Fridays towards the end of the month. Huge moves because they're balancing their books. Earnings. Fridays and Mondays in earnings fortnight. Huge moves. Look at yesterday as well. I don't trade indices on weekends. That's good because they're shut. But I've never been a fan of any of the day of week scenarios because you can disprove them all so easily. For every time someone says, hey, look at these 5 Fridays where it didn't move, I can go, look at these 5 Fridays where it went to 300% of ADR. Depends what news is on, doesn't it? What you shouldn't do a lot of the time is trade after a big news because we quite often get a whipsaw, or just before news where we get a whipsaw. But then again, some days we look at this and go, we might well sit around all morning today because we've got news in half an hour, 5R in 10 minutes. It's just get in and wait. There's nothing you can do. So you closed only positions on green before the news? Yeah, I always do. I say it in here every single week. Every single time there's news. Said it this morning. You got it, green, shut it. Take it. If you don't take it, you'll lose it. And if you don't lose it, it'll go further. So this, what did I close? Did I close a partial today? That was a single, wasn't it? So Euro Swiss. So, for example, on this Euro Swiss, got two positions on. Yeah, got one there and one there. There's the average. So, for example, if let's say we're sitting here, right, or here, and we're not in enough profit. Let's say we're sitting here, we're not in enough profit to close the whole position out. It's not enough. So we're going to wait. So if there's a news event about to come out on the Euro and the Swiss today, yeah, half an hour, 20 minutes before that news, this position is sitting in X amount of money. Yeah. Two things are going to happen on the news. The news is going to spike in my favor and hit my target, or against me and put this position into drawdown. So what can I do? If I close this position, that then goes into my bank account. Regardless of which scenario happens, I win. Because if it pushes up, this one goes into profit and I get even more profit. If it pushes down, I add this position back on and take it off again in profit when it pushes back up again. So that becomes a win-win. If you leave it and the news goes against you, you can't put that in your bank and you've now got to deal with more drawdown. There's absolutely no reason to leave something in profit on when there's a news spike coming. Because, yes, the argument is, everybody always argues, well, but what if it goes that way? If you took it off there and it went that way, you'd make twice as much money. Yeah. Do what you want. Up to you. But I'd much rather take some money than lots of money than sit in drawdown on anything. If I can get in and out of something, I'll get in and out fast. I'm done. Because there's another setup coming in the next half an hour. I'll take that one. So bank the money. Your job is to make this green. Your job every day is to make this green and reduce the size of the red every day. That's your job. If you've got something in green, take it. Can't have it back. Always. S&P's on its way to 2R. NASDAQ's undone the entire news move. Hedge me. Should have taken the 5-minute ORB today. Prime example of what's best to take, pre-market or 5-minute. Today it was the 5-minute. Yesterday it was the pre-market. Can't see into the future. Didn't know which one to take. Should have taken the 5-minute ORB. Would be at 3R now. Given the probability of certain extensions of ADR varies depending on the pair, wouldn't it be better to determine entries and targets by probabilities rather than extensions? I don't know what you mean. The probabilities are the same every single time. It's 50-50. Every time you press the button on a candle close, the odds are 50-50. The probability of price moving, or the factual historical data over the last 25 years of price moving beyond that level is 12%. 12% of the time, price moves beyond 150 ADR. Today being a prime example. It happens on news events. But if you look at Aussie dollar, US dollar now, at 150 ADR, if you take this reversal alert long, which is just about to trigger, what's the probabilities of it going up there or going down there? It's going to do one of two things. One of three things, which is all the market can do. The market has only three constants. When you get into that trade there, it will either go up and it will hit your target. It will go down and take you into drawdown, or it will sit sideways. Those are the three things that are going to happen. 100% accuracy, I can predict that. I can't tell you which. I could predict it with a 33% accuracy, couldn't I? But that's it. There's no. So all these lines for ADR are the historical percentage times we exceed the levels. What happens at these levels, no one knows, because every time it gets to them, something different happens. So all it's doing is telling you, Christ, that's extended. What happens when we get extended? We'll usually do the opposite. Why? Because the banks have got a massive amount of profit which they need to take off their books. Everybody that piled in there yesterday has made an absolute fortune, me included. Yeah, I was with the banks today. Look, they piled in short, so I got on the other way, waiting for them to get out long. Now they've gone long, I shall pile in short with them, because the next thing they're going to do is pull it back down, because they need to take profit on that long move they've just done. But when it will happen, today, next week, or on Tuesday next week, I couldn't tell you. But what I can tell you is that propulsion gap will be filled at some point, because it always does. Or if that one doesn't, the next one they put in will. But there is no way of telling which way and when, is there? This seems to be my life at the moment. Tapping TPs. Did it this morning, didn't it? Did it to me this morning on the FTSE. Look, that was my TP, that little blue line there. Yeah, that was my TP this morning. That's why I took that off there. Look at it. Through my TP twice. Didn't trigger it, so I had to get out on my own. I would have got target hit eventually 3 hours later, but I'm taking Fridays off from now on. It's become one of those things, isn't it? The last month. I got an ADR on Aussie UAD reaching 175, but it's only 150 ADR. I don't know. Aussie US, is that? Yeah, it hasn't hit 150, 175. It won't alert you if it hasn't hit the level. It can't. If it is a glitch, I don't know. What news do you consider in terms of closing? Anything that's going to move the market? Red news. Anything red on here has the ability to move the market hard. If it's red, it can move the market hard. Especially, I mean, obviously, anything to do with interest rates, unemployment. It's the fundamentals. Look, anything to do with interest rates, inflation, GDP, or unemployment will all move the market hard. There's lots of other things. Your PMIs, CPI is inflation, but PMIs, anything that's red. Anything that's red on here is part of the bank's scorecarding system. So if there is something comes out on here that the banks have scorecarded differently, and we get a high deviation on the forecast, which is what the banks will be working to, they will have to reposition themselves, which means that they will just undo or dump a load of their orders, which makes a whacking great candle. Which direction it goes on that is irrelevant. Yeah, if that comes out as a massive negative, there's nothing to stop the US dollar spiking, because they'd forecast it wrong. If they're positioned the wrong way on it, at that point, it will move up, which is why on non-farm payrolls sometimes and other news events, you get a green number and the market collapses and everyone goes, but that should have gone long because it's green. No, it's gone whichever way the banks needed to take it. If they're balanced long or short, and that is the way that they're going to make money when the market moves, that's the way they will take it. It will correct probably. So if you get a green number and it drops, highly likely it will do a V-shaped recovery, because it's just a manipulation move before they get back out. So I've missed target on the S&P by a pip. fortunately. NQ sellers 1, buyers 1. Even ball game, yeah. It's going to be mayhem today because it's obviously off the back of non-farm, so it could do anything. Tapping TPs. That sounds like a song for JP's band. Tapping TPs. That's what your broker does. Regularly. Let it ride. So let's see what we're doing with these US pairs. So Aussie US still dropping at the moment. Let's go down to 15. We can see a bit more. So still strength in the US dollar at the moment across the board. And US still coming down. New Zealand US still coming down. And all the US is still pumping away. So no entries on the ADRs yet. EuroCAD's completely reversed. So the Canadian dollar obviously moved with the US. Just tweeze the bottoms at support. Back up again. So again, we're stuck on this. Still stuck. I can't get anywhere with this bloody thing. It's been stuck all week. Sideways. 4 days. Totally sideways. Just looking for a push back up into propulsion to get out of this. Not looking for a lot. Just looking for a move. Can't get it. Which broker are you trading your Forex with? Forex. What are the swap fees like? Same as all the others, high at the moment. It's not the brokers seem ridiculous. It's the cost of borrowing money is ridiculous. That's what makes it expensive. Nothing you can do about it. The cost of borrowing, isn't it? Interest rates are high. So therefore your cost of borrowing money is high. And basically every time you hold a trade overnight, you are borrowing money. Nothing you can do. But all brokers are the same. So all brokers will charge you a percentage on your overnight hold. It varies, but it's not much. The Islamic accounts are worse at the moment. The so-called no swap accounts, because they just charge you a fixed rate, which is higher than interest. So you're always paying more. Market trying to rally. What are the R1, R2, R3 levels? They're risk-reward levels based on the range. So this is your range. That's the pre-market range for the SIH strategy. And that is 1R, 2R, 3R. So the risk that the EA takes is based over the range. And obviously that is 1 times your risk, 2 times your risk, 3 times your risk reward, basically. Okay, I'm closing out the DAX shorts We'll re-hedge on the DAX if it drops. Just going to see if we can get a rally. Looks like it's dropping again now, doesn't it? If one pair has historically reached ADR 100 50% of the time, you'd have to do analysis on a pair by pair basis, basically, to find out that sort of information. But another pair has ADR 200 50% of the time. Wouldn't the optimal be? No. Go watch the video. Once you don't understand ADR, watch this video on that website. The ADR figures are an average across FX pairs. All FX pairs do the same thing. Yeah. So FX movement is based on US dollar. Yeah. US dollar is the major currency. Every time, look at this. Prime example, US dollar yen gone through the roof. CAD Swiss, nothing to do with US dollar, gone through the roof. Euro odd, not the US dollar, gone through the roof. Yeah. Every FX pair moves on US dollar based news. So all pairs move when there's news. Yeah, because if you want to buy the US dollar, what do you do to buy the US dollar? Liquidate another currency. So if you want to pump 100 million into the US dollar today, you need to pull 100 million out of the other currencies. So when ADR gets hit by one currency, it will get hit by the other currencies. Yeah. I've done analysis over 25 years across all FX pairs, majors and minors, and the difference between them is less than 1%. So when you say something, one pair will hit 100%, 50% of the time, and another pair will hit 200%, 50% of the time, that isn't true. They all hit it roughly the same amount of time. There is no deviation. It's all explained in the video, but it's very... You're trying to get something accurate. Yeah, this is a random, chaotic number that moves up and down on a daily basis at random. There is no way of quantifying historical data into the future. Yeah. If I flip a coin 100 times in the past, right, and I will get a sequence of head, tail, head, tail, head, tail, head, tail, the next 100 times I flip it, I will never replicate any of those 100 flips in previously. Yeah. Every single candlestick on this chart has never been replicated ever. Yeah, go and find me 2 days with identical candlestick patterns. You won't. There isn't no such thing. Which means that anything you do on back testing analysis will never happen again in the future. There's two things that are going to happen. And Brian has just made a brilliant meme about it. Those are the only two constants in the market, up and down. When, how, distance, no idea. No one has. If we knew that, we'd be billionaires. Impossible to predict. All you've got is risk. If you just trade yen all the time, then get an Islamic account. Why? Why pay more, though, Google? Doesn't make sense. An Islamic account charges more overnight than a swap. Yeah, it just doesn't deviate. Go and get an Islamic account. Go and get a normal swap account. Put the market reversal alerts EA on it for a month. Let them both run side by side. Then come back and show me your swap figures. They're a con. They charge you higher than interest. It's all a con. Don't be fooled. Brokers are very, very clever. Do you have any idea which currency between New Zealand and Aussie is more correlated with the US dollar? Look up a correlation chart. Type correlation chart FX into Google. Go and have a look. Let me Google that for you. What was the question? Which one? Aussie and New Zealand US dollar. So the Aussie US and New Zealand US. All right. So Aussie. Brain. No, what are you doing? Bloody hell, this isn't even in order, is it? New Zealand dollar, US dollar. There we go. Right, Aussie, US, New Zealand, US. So those two are 94% correlated, which is more correlated with the US dollar. You can't answer that question, can you, Ari Forex? Because you've got to have something to correlate it with. I don't think you can get an answer to that question. Because there is no such thing as an Aussie chart and a New Zealand chart. Everything's crossed with something. So you can't answer that question, can you? I'm trying to answer it, but I don't think you can. University of Michigan did nothing. Nah, as forecast. So it's very rare that does. And it's also the revised UOM as well. So it's not even the UOM. Yeah, nothing. No impacts from that at all. US dollar Swiss 150. Still pumping. So we're coming up to very nice resistance on this. So previous support, resistance, 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 resists. So we're either going to continue this rally for a couple of days and we will be pushing up into that area or into that double top at 200 ADR and then come back and retest the propulsion, or we'll just put that in next week. Same as that or same as that on Monday. We'll see where we go. Didn't get the buy stops on either. Okay, I'm going to let that run and I need to move that down. I'm not going to re-hedge it because I haven't actually got the aggressive position on yet. Move that down and keep an eye on that today. This is going nowhere, this thing today, isn't it? Yeah, as Brian just said, you can check the brokers' sites to if you want to check the overnight swaps, but I mean, it's just I have never really paid much attention to swap because I've always found most brokers are the same, and it's all related to interest rates. So there's nothing you can do about it. It's a cost of doing business. It's become more expensive in 2024 to be a trader as it was in 2023 because this is up here. In 2026, we'll be going back to what we were paying in 2021. It'll be cheaper to trade. But right now, it's expensive to trade, and you have to let your trades run longer to take account of swaps. So, if you look at my swaps, I paid on my FX Blue, isn't it? I paid so I've paid $938 in swaps since beginning of January. There's nothing I can do about it. I haven't got a choice. Either I want to trade or I don't. But some of my trades have been held over 3 or 4 weeks. So the swaps mount up the longer you hold. But it's to do with the swaps. Swaps basically are to do with the positions you hold every night. Yeah. So if you're holding 10 lots on a Monday and you're out of those lots on Wednesday morning, you won't pay much swap. If you hold it through to Thursday morning, you'll pay double swaps on a Wednesday and you'll pay double swaps at the weekend. So you can't control it because you can't say to the markets, could you just get me out on Tuesday afternoon just so I don't have to put double swaps? I promise I'll put the trade back on Wednesday morning. You don't get a choice. You pay it. That's it. There's never been a broker I've found that is any better or worse than anybody, really. I mean, they all are slightly different, but you know, it's just something you can't really do much about. So, yeah, Eri, Liquid FX broker has a swap-free ECN account. No, it doesn't. No, it doesn't. Doesn't say anything about. But a swap-free account is not free to trade. Yeah. Look at IC. I'll show you IC markets. Yeah. So this is IC markets swap-free account. Yeah. The swap-free option is available for both raw and spread. Overnight financing charges, Aussie CAD, $5 a lot. I don't pay $5 a lot on the Aussie CAD on a swap. I pay something like $2.30. Yeah, as Brian, I think Brian just said, hasn't he? $2.48. Yeah, so if you're holding a lot with Oanda on EU, majors, right? Oanda, you'll be paying $2.48. A swap-free account, you're paying $3. More expensive. No such thing as a swap-free. Basically, can you think about what you're saying? It's like walking into a petrol station and saying, "Going to fill my car up. Is it all right if I don't pay?" No, mate. You need to pay for it. Oh, okay. That's what you're doing. You're saying to your broker, "Can I have a swap-free account so I don't pay any overnight swaps?" Yeah, no problem. We'll absorb all the cost of holding your positions for you. What's happen? Now they make money. It would be lovely, but not the real world. I'd love it. Wouldn't it be nice? Bit late reporting in. Afternoon, Virginia. Actually, I have the use of Islamic account, and I can tell you the cost is about twice as much. There we go. Easy. That massive rally on the indices goes for 3 months now. Does not seem like there is interest for a pullback. Yeah, maybe. Don't know. We'll see. That's what indices normally do, though. I mean, that's the norm, isn't it? Yeah, indices rally. That's what they do. Indices are manufactured to go up. Yeah, you won't find indices going down very often. We're in a bit of an anomaly in 2023. We don't normally have that. Go and look at a historical chart of the S&P 500 going back 15 years. It's like that. Why? Because businesses make money. What happens to businesses that make money? Their stock price goes up. What happens if a business starts to lose money? They fire the board, restructure the business so that it's profitable. What happens to its stock? It goes up. Never find an index going down. This is why people like Warren Buffett make 8% to 12% a year, pretty much every year, by literally buying the S&P. That's all you do. Just buy the S&P on January, December, you'll be in profit. Why? Because the stocks will have gone up on businesses, because if they make a loss, they get fired. And what do you do if there's a business with the stock price dropping and underperforming? You sell the stock. What do you do with that money that you've just taken out of that stock? You put it into one that's going up. what happens to the ones that are going down? They disappear out of the index. They get replaced by one that's coming up. The S&P 500 is the top 500 performing stocks. They're not going to go down, are they? The NASDAQ is the top 100 performing tech stocks. Not going to go down, are they? Go and look at an S&P chart. You don't sell indices. My strategy on the website for, or actually it's on the Market Reversal Alerts EA. It's linked. It's a bit hard to find it, but oh my God, why does my website always do this? In the stream, for some reason, it just goes super slow. Oh. Anyway, if you go to the blog post for the Market Reversal Alerts EA, here we go. Test results. So this is the S&P 500 daily chart. I don't know how long this is going back, but yeah, that's what the stock indices do. Yeah, if they went down, you would pull your money out of those stocks and you put them into a stock that is going up. And if you pull enough money out of those stocks, that stock will drop down the S&P 500 until it becomes 501. And then a stock whose price is rallying will come in at 500. It can't go down. No stock market can, because a stock index can, because it's manufactured to make money. That's what they do, businesses. They don't lose money. If they lose money, they vanish. If they vanish, they come out the index. If they come out the index, they're replaced with someone that makes profit. So all you do, and all Warren Buffett does, is every time it dips, you buy it. He 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 dips, you buy it. And this is what this set file basically does for the Market Reversal Alerts EA. It just basically buys the dips. And it keeps buying the dips until the stock rallies. This is my pension fund strategy. But I haven't been running it since we went into a bear volatile market, because it's broke at the moment. Hello from Dubai. Afternoon, Anise. US dollar yen, one swap is $87 on 1.6 lots on IC markets. Quite possibly. Why haven't you opened an entry on US dollar Swiss? I have. I have, because there's been a reversal at 125. There. And now it's gone up a bit more. In terms of swap, Interactive Brokers is great, but they're not. Yeah, that's not a CFD broker, is it? Interactive Brokers is a CME futures broker. I have ECN accounts with them, and I'm not paying a swap. Yeah, but you are paying a commission. Is there a different brokerage fee comparison? Hey. I don't know. Never looked. Go and have a look. I'm not Google, Wayne. Go and use Google. Put it in. Brokerage fee comparison. Let's do it. Let's have a look. Brokerage fee comparison. Money supermarket. Stockbrokers. Broker on wheels. These are more for CME brokers, aren't they, rather than CFDs? these are all going to be affiliate websites, aren't they? So it's a minefield. I don't know if there is one that just does the fees. The trouble is it changes though. So, I mean, whoever's running the site that does comparisons is going to have to update it on a regular basis based on what happens with interest rates, aren't they? So if you want fully, I think if you use a spread betting account, if you go with someone like IG, then yeah, you'll probably have no swaps because you're not you're basically spread betting, which is betting, not trading. So you'll probably find that is a way that you could get around it. But I mean, you can't get around it. It's just a cost of doing business. Yes, you're right. I'm paying $5 a lot in commission. Yeah. And if you hold overnight, you'll probably find you have an overnight charge as well. But I don't know. Just about to get triggered on the aggressive on the DAX. Oh, it's totally stuck. Look at this Dow. Look at this. I mean, you just can't do anything with this today. We're still inside the opening range. S&P, I'm about to close. That's twice it's nearly hit target and hasn't. Five seconds, yeah, show it. So our S&P first half, if it runs, it runs. If it doesn't, it doesn't. There's nothing I can do. There's no volume today. That was the only, so, you know, look at, we always talk about this hindsight kind of trading, yeah. What's the best thing to do today? Not take the pre-market on the NASDAQ, wait for the 5-minute opening range and take the 5-minute ORB. You got 3.5 hours. What's the best thing to do today on the Dow? Don't trade it. What's the best thing to do on the S&P? Exactly what we did. Take the pre-market range break and get out at 2R. Yeah. 3 indices, 3 totally different scenarios. Which one do you pick each day? You can never know. There's always a best thing to do with every single index, every single day, but it doesn't matter how much you backtest, there will always be the wrong decision. Are you still trading the triangle breakouts? Well, yeah, but only I don't trade them specifically. No, symmetrical triangles. No. But yeah, symmetrical triangle formation there. 1, 2, 3, 4, 5, 6. Break. One way or the other. But there is also the third option of invalidation. Symmetrical triangle strategy is exactly the same as any other breakout strategy. It's a momentum breakout strategy. It fails without momentum. So only works if there is a momentum breakout. So take a break of that candle there, and that's your entry 1, entry 2, entry 3. Off you go. But it could well just, you know, do that for the rest of the day, couldn't it? Hopefully not. Brilliant. Okay, so DAX, hopefully we should be back into aggressive now. So I got an aggressive entry back on the DAX. So just looking for a quick exit on that. If we can get a rally, just going to put the hedge back in place in case it doesn't. So if I can get a result on the DAX, so the FTSE this morning made $80. If I can get 70, 60 out of that, that brings me up to 140 there. 240, 240. So I need a decent break on the S&P and the DAX to hit target. That will bring it all into profit for the day. But other than that, messy day again. Messy day. When will this pound odd collapse? Let's have a look. 175 New Zealand US, US dollar Swiss just about to hit 175 as well. Was that New Zealand dollar US? 175. So still running on the US dollar. So there's your big propulsion gap. I just hope we don't get another one of these month. News, nothing. News, nothing. News. That is the market at the minute, isn't it? All it's doing. Aussie dollar, US dollar. No, pound odd. It's just doing nothing. So you had the reversal on the hourly, which is a false breakout of that high. So you want this propulsion gap that we're just testing now to hold, ideally. So we're just retesting the sell that made the break. They tested it 3 times and rejected it, and then pushed away from it straight into the propulsion gap that bought, which they've rebought. And obviously now we've had the news. So it's battle between that propulsion and that propulsion. One of those is going to break, which means you're either going to get market structure to the downside, or we're going to continue market structure long, one or the other. I'm going to use this every single time now. This is brilliant. But at least I can show you what is going to happen. I don't know which is going to happen, but I can tell you what is going to happen. Yeah. So plan for those outcomes. You're short at the moment. Wherever your average is, if this looks like it's rejecting, you could get an aggressive entry on with a stop above the high. So wait for a reversal on 5 minute or 15. 5, 15, they're probably the same alert. Oh no, it's there. So there's your 15 minute, 193, 712. 5 minute, oh, it's the same place, pretty much. New Zealand CAD 125 ADR. So you could wait for a reversal to go in, put an aggressive on, bring that average up. Or depending on, you could use that high and see because if we invalidate that high, it's off that way, isn't it? Yeah, it's stuck. It's stuck. It's just one of those trades that's just stuck. There's absolutely nothing you can do with it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13 days, 3 weeks, pretty much. Just sideways. This is what I say. This is what we're getting at the moment. We're getting a news event which kickstarts a couple of days worth of rally, and then we go nowhere. It's undoing most of them. So Aussie dollar CAD 150. So pound odd rallying. Canadian, is that Aussie or CAD? Oh my God, look at this. Aussie US 200 ADR. This Australian dollar is dropping at the same time as this US dollar is rallying, and the Canadian dollar is obviously rallying with it as well. So we got a lot of strength coming through, a lot of weakness coming through in the Australian dollar at the moment. 200 ADR, look at that. The size of that propulsion move, look. Should have held everything today, shouldn't I? If only you'd known. TPs for the NAS hedge. I find it very difficult to believe we would get above pre-market highs today. What have we got coming out earnings-wise today? So we've had it all. It's all pre-market. So we got Caterpillar, Estee Lauder, and McDonald's pre-market Monday. So there's no aftermarket news. That massive spike we had yesterday was caused by Meta and Amazon releasing early. There's nothing to release early, so it's unlikely we'll get an end of day flush, basically. One sec. So yeah, I mean, we've gone long, so I would go high of day basically, and just see if we can retest that level and get a bounce out the highs. But other than that, it's going to be tricky. Downside, I don't think we'll get down there. But I mean, I would just go with ADR today. It's not the sort of thing I'm looking to actively get out of today. I want to make other things pay me, ideally. But we'll see. S&P obviously is still long. So target on that. Again, just move my target down for the second half of the position and just see if we can get a push back up. Hedge here, again with the Dow. Yesterday's high. For the upside, downside ADR. But I mean, the volume, I mean, look at the Dow. It's just not going anywhere. Market's exhausted itself on the non-farm move, isn't it? I'm sick of seeing Greg Secker ads on YouTube. Aren't we all? Aren't we all, Sam? Hey, I've got this new AI thing you can buy now. Give me $5,000 for the course, then give me $5,000 in your brokerage account, which I will have from you. I will also take a commission in my brokerage account, and then I will rent my software to you for $100 or $150 a month. And I've got this new AI thing you can have for $50 a month. And thanks for the 10 or 15 grand. You're not going to make it as a trader. Bye. Off I go wild swimming. After driving my Rolls Royce to my private jet to my house abroad from my mansion, all paid for by education. He's pimping that Zoltan pipe. It is a bit Zoltan, isn't it? I like it though. It's good. 84 of you, don't forget to press this button. I will do the 5-day bootcamp videos over the weekend. Cool. Do that. That will hopefully open your eyes to what is going on. I feel like it's having a laugh at me, like it's taking the piss. Yes, you get that. Sometimes you just get positions that just don't do anything. I had it with exactly the same thing with the pound yen, and look what the pound yen's doing. I've made some nice money out of this pound yen, but I now need a 2 ADR move to get out of it. It's doing exactly the same thing. It's just stuck. That yen will go at some point. So I'm not particularly worried about it. It's just I'd rather get out of it now and get back in later because it's costing me swaps. Big style. I've reduced the lot size right down on it, so it's costing me a hell of a lot less than it was. But just stuck. What a huge ride on the NFP news. Yeah, big one today. Do you trade gold? No. I don't trade US dollar plays either. No. Google, you still haven't watched the bootcamp, have you? The questions you're asking means you haven't put any time into watching any of the content that I've spent hours and hours and weeks and weeks and weeks putting together to show you what I do. Watch the bootcamp, watch all the educational videos, download the position trading handbook. That is now that Greg Secker. That's cryptic. US just added 350,000 jobs. It did. No need to cut rates soon. Nope. Google, you asked the forbidden question. Forgot to use the slide. That's what's happening with gold. If Keanu Reeves sues me, by the way, Brian, I'm passing that sue on to you because you created all of those. Dougal, yeah, sure. Just had a little bit of sell order just coming across the board there. Not far away from target on the NASDAQ. Pound New Zealand ADR. Big push up. Pound New Zealand. This New Zealand dollar and the Australian dollar both dropping together. They always do. So big weakness across the board in the Australasian pairs. I've got no Aussie exposure at all at the moment. US dollar yen is approaching the January high. So I'm going to take a second, not second, this will be the fourth position on the US dollar yen on that reversal alert. I'm going to just put a manual pending order on this because I'm not going to trigger it on that at the moment. So if this just pushes up and we don't get a down candle and then it just comes down from here, that entry there is actually too close to my previous entry, which is here. I need about 80 pips between entries, and that is only 62. So I'm just going to place a pending order manually on this one. And obviously if the EA does trigger, what am I trying to do? I can't work out maths. Yeah, if the EA does trigger, then I'll obviously take my manual position off. So just putting a pending order. I'm just going to put it down below that high there. Just in case we come down and test that area and carry on moving up. If it does come down, I want to trigger it there because that is going to be an entry for me with the EA. If it does do that and we get an entry there and then it triggers mine, once we're down here, I can take this one off. But obviously, if it collapses all the way down, then I'll leave that on with a break even, double bubble, even better. But, I'm just going to put a manual on that US dollar yen because we're at January high. Sorry. Yeah, that can't be January high. That must be an old high because we've got a higher high there. Look. That's February's. What is that? 2 months. That's December's high. So that's the high of December. We just collapsed from the open in December That's January's high. So we're coming up to the December high. But this whole area here, obviously, is resistance. So looking for a pullback from that area. I just want to get this average up to get out on a pullback on it. Pound Swiss. Still got plenty of room to go. Stuck. We are stuck. Should do a John Wick oil poster. Yeah. What you should do, Brian, is John Wick dressed in a gold suit, covered in oil, and then you can put, "I don't trade oil and gold" on top of it. I watched a lot of your stuff, and you never mentioned gold. Yeah. There is a video on my website that explains why I don't trade gold, which you obviously haven't found yet. Go and watch that one. Right. Well, this is stuck. So there's no point in sitting here watching this. The Dow hasn't moved. We're nearly an hour and a half into the session. This dotted line is the 1.5 hour mark. We're nearly an hour and a half in. And that's the open. And that's where we are. So Dow Jones basically might as well be shut. There's a 3-bar reversal just going on the NASDAQ. I'm just going to move my TPs on the NAS up. We might get a breakout here. Just watch for a pop of that high. And if we do, we're going to pop up into ADR. So that is a much better TP up at the high from the week. So this is the high of the week. This is Monday's high. Friday, Thursday, Wednesday, Tuesday's high, sorry. It's where we closed on Monday. So Tuesday's high is also that high, and that is the high of January. So if we can get a pop out of that high, we'll probably flush up into this area, and then the limit orders will trigger up at these highs and drive price back down again. So it'd be lovely if we can get out the top there on the NASDAQ. That will also take the S&P up to TP2. There. And obviously then the Dow will get underway as well. And that will give the Dow an opportunity to rally up into the highs and obviously trigger limit orders off the top there. So let's see that NASDAQ, see if we can get that pop. If it doesn't pop, then meh, nothing we can do. Order up. Yeah, then I can have a universal slide for oil and gold, can't I? Okay, NASDAQ on the highs. So just watch these limit orders flip. There it goes. Okay, so we'll see if they hold this level. If they hold this level, this might be where we should get out today. Didn't really get a pop, did we there? S&P's on its way. It's going to lock in a bit more profit on the S&P as well. Okay, so this US dollar is probably reversing now. There we go. Back up on the US. Back down on the US, rather. So everything's going to mean revert back up. And that will give the indices a little bit more strength. We need to see them get through, though. Batting into the high on the S&P. January high. Stalled. There we go. So they're undoing the move. Right, so if they're going to undo this non-farm today, we don't know if they are, but if they are, we're looking at a V-shaped recovery. If we're looking at a V-shaped recovery and a continuous weak run on the US dollar for the rest of the day, those indices are going to drive today. So there's a good chance that we would push beyond ADR today. Obviously, when we hit resistance, we're going to get limit orders trigger and they're going to try and push the price back down again. So again, watch price action approaching this level. If it is just parabolic, yeah, I would move up to the next level and see if we get them hitting that level and not being able to get through. If that is the case, that's probably where I want to get out. But all the time this is parabolically moving towards a level, there's a good chance it's literally just going to blow straight through it to the next point. Obviously, if they keep selling the US dollar, it's going to do that. This may well just be a small pullback and a continuation run on the US, though. You're not going to know until it's obviously playing out. So just be a little careful. We've seen, as you know, 225 ADR days on the S&P and the NASDAQ. We had an S&P 225 yesterday. Moved 88. ADR is 47. So they are buying the crap out of stocks at the moment, so we need to be a little careful. TP2 hit on the S&P, out and flat. TP2 hit. Okay, so watch this high and see if they pull back. DAX. Close of the DAX, just in case it pulls back from here. Just that gets me flat on the DAX with about $30, $40 loss. Just gets me out. I haven't got to worry about it. Just watching this level. I want to see if they get through it, because we may well, this might be it. And we're going to pop back down from here, which means that US dollar will rally back again. So this will just flush. See where we go. Please remind me, there's something you mentioned about MT4 being CPU intensive. Pound yen ADR. MT4 is more CPU intensive. CPU. It only uses one core. So does MT5. But you want to focus on CPU and RAM, not GPU. Disk. Yeah, I mean, anything that if you run an SSD, it's going to be faster because it writes a lot of data. You're constantly writing a log file. You're constantly writing data files. So MT4 is constantly, every tick, writing data to your terminal, to your data folder. It's writing log files constantly. So anything you can do to speed that up is good. But at the end of the day, any modern PC, I always go gaming PC because gaming PCs are always high end, high CPU, loads of RAM. That's it. But GPU, not important. Can you run your EAs on a web browser? No. So software. You can't do anything on a web browser. Or a mobile phone before you ask. Okay, we're through the highs. Shouldn't have got out of the DAX. I think this is going to run. So bear with me 1 second. Just waiting for this candle to close. Got 5 seconds. Okay, so I'm at the DAX, $56 net loss, 192 on the S&P. FTSE's banked 80 odd. So it's going to be a down day unless we can get a target hit and an exit on one of these two. So not particularly convinced by the way that that's stalled out at the highs of yesterday and today's highs. So we've certainly got sellers interested at this level. So just going to watch this price action for the next 5 or 10 minutes and see what it does. If it continues to rally and we put a new high in, I'm going to assume that we're going to run for the highs at ADR, and I'm going to leave it as it is. If we just go bear, there's still a chance that we're just pulling back and the propulsion move here is going to get added to. However, there is also a chance that it's going to double top or triple top off of this high. Yeah, so those are the two scenarios we've got. And if it's going to be the high of the day, we're coming back down, and we shall come back down and test somewhere down here probably. If it's a pullback and long, we're going to come and test this high. So your decision to make on the NASDAQ is, if you are hedged, as I am, do you exit your longs here and then ride it up, wait for that pullback, or not? So this is what we're waiting to see, if we can get a break of that candle there. So this is quite a key area. So we've rallied into this area. Sellers have put a halt to the bulls. Who's taking control next? Or we could just peter out. This is 1.5 hours in. 1.5 hours into the session, which is this dotted line, you've either found the high of the low, high or the low of the session. 95% of the time, one of those two is true. Obviously, as you've been rallying away, that would make more sense. So that's the low of the day, which means that this has got more upside. But let's see. What's Tuesday's open mid? Makes no sense. What happened on Tuesday has got nothing to do with today. This is a double top. It just happens to coincide with a different level. Every time someone says to me, watch that level, I can show you another level that coincides with. Which one's right? Flip a coin. If you like it as a strategy, do it. The odds are the same. It's 50-50. It may go through it. It may come back from it. Every time you tell me to watch that level, I can tell you 10 instances where it didn't happen. And you can show me 10 where it did. Still 50-50. And also, when you get things like that, when people look at these levels, so you do get action. There's a very well-known strategy with VWAP with futures, and it does react. But when you get a level that you are expecting something to happen at, you will often get some kind of reaction because it is a level. However, whether you make money out of it depends on whether you are getting in there with a stop there and a target there, and it does that, and you go, see, told you, I made money. Or whether you are getting in there looking for a pullback and you're looking for a decent move. Whether it does that or that makes one of those valid or not valid, doesn't it? You never tell. It's not about the system, the strategy, the level, the entry. It's about the exit. That's what makes the money, not the entry. But you've got to have a reason to get in. There's nothing wrong with using Tuesday's mid. It's just another level, isn't it? It's going to react somewhere. This is why support and resistance is never a line. I always put it as a line because you've got to have a line. You've got to have a point. That is the high of January. No doubt about it. That's where the price didn't go beyond. That's the high. But this area here is where we got the reaction. And when we get back to this area, it's not going to hit that level. It's going to react somewhere around there because there's going to be banks limit orders all over the place ready to sell this. You never pick a specific line. It's an area, isn't it? Okay, indecision. So if we get a bull candle here, that'll be a second 3-bar reversal. Which is a continuation pattern. With the ADR high. Not going to jump ship just yet. Although it is 5 to 4. I've got to go out in half an hour. So we'll be jumping ship at some point. The Dow, I don't think we're going to get any joy on today. It's struggling, really struggling. I don't think we're going to get there. So that's probably just going to be locked in today. I very much doubt we'll get down there. You never know. We might get one of those end of day flushes, but looks like we're going bull again. That was a good exit on the DAX. So this is me pissing about with the new EA for the last week and a half. 22 grand I've made. Just pissing about on the 1 minute chart. Hard not to make money when you're position trading, isn't it? Not a stop loss in sight. $22,000 in profit. I'm going to backtest that as well. H1M15. Serious amount of money. It's just been doing exactly the same as normal, multi-time frame mean reversion, but on chaos time frame, and it's still managed to make money. Lots of it. M1 that's trading. It's just trading Swiss yen, Euro pound, Aussie US, pound CAD, Euro New Zealand, and Euro US. M1, M15. Or the M15, M1. I mean, it's got into some serious drawdown, but this is a 200k account, so it's made 10% since 23rd of January. Where are we? So yeah, a week. Don't go and trade the 1 minute chart now. I think you'll find it's a fluke. Euro yen ADR still going. So this yen weakness is still continuing by the looks of things at the minute. Oh, I don't know. Actually, this might be the euro. Bit difficult to tell. It looks a little bit like euro strength, but so much moving at the moment, it's hard to tell. So there we go. The pullback started on the euro, on the US dollar still. So we are still potentially selling off that US, but okay, I'm closing the longs on the NASDAQ. Whoops. Oh, God. Unable to operate a mouse today. Okay, 3 seconds. Okay, so we'll see where this goes from here. So good rejection. So we've hit the double top. Buyers have been halted. Nobody took control. Buyers tried to retake control. Sellers overpowered them. So looking like at the moment, sellers have taken control at this level, but we are hitting that accumulation break here. So this propulsion gap and that high is the battle zone. So we're either going to break that, the buyers are going to retain control and run for ADR, or they can't get through this propulsion gap where they're trying to add the positions in. You can see they're adding from this level. Yeah. Either they are going to get overpowered, puke, and flip short, or the sellers are going to get run over by these buyers and we're going to flip long and go up to ADR. So one or the other. So I'm based on the fact that we could do with a pullback, I'm just going to get out the longs and hope that we go short. So aggressive exit is going on there. Meaning that I won't really need much more than a push back down to this sort of area to get out today. See where we go. 22k and what account size? Yeah, it's 20. It's a 200k account. Demo, obviously. I'm not stupid enough to run it on a live account. It's about what H1 hedging can do, really. Yeah. Triggered short. But it's on the 1 minute time frame, obviously. It's trading absolute algorithmic nonsense. So AI doesn't like oil, can't figure it out. Yeah, it had trouble with time machines, didn't it? Okay, break even NASDAQ. Got to run. Thanks as always. Yep, no probs. Have a good weekend, Mimo. I'll be going soon as well. How big was the drawdown? Oh, I don't know. I don't know. I'm not. It's testing functionality. It's not. I've no idea what the drawdown was. It's a functionality test, so I'm just making sure it does what it's meant to be doing when it's meant to be doing it. Making money, basically, but I'm not paying attention to exactly what it's doing. I'm not watching it on a regular basis. I'm just basically watching it to make sure it does what it says on the tin at the end of the day. So just bear with me one sec. I'm just doing stuff. Ooh, yeah, that in place. Come on, one more little push, NASDAQ. So this propulsion gap is our potential danger. So this is where we rallied into today. Got stuck. Sellers didn't want us to go through that level. Buyers took control. That's the propulsion move that started that break into resistance. Sellers are taking back resistance. Buyers are trying to push back out of this area here. So it's basically a battle between the highs and the propulsion move. One of them's going to win. Hopefully it's the sellers. I had an exit there for $40, but I've decided to leave it, seeing as I'm having a good month so far. Do you think you could put it out in Feb? Yeah, hopefully. Well, yeah, I mean, I've got to test it live first. NASDAQ short done for the day. Good job, Brian. Yeah, I've got to test it live. So basically, I've still got coding to finish. It's still got functionality to add. It's not ready yet. But I say those buttons are around the wrong way. I changed those. I haven't refreshed the EA. Yeah, when I've got the functionality finished, I then need to do all the back testing in the strategy tester to make sure it's doing what it wants to do, what it should be doing. And then I'm going to stick it on a VPS on every pair on 5-minute time frame and use H1M5, but I'm going to use 60-40 levels on H1 so that we get loads of trades added. Just to make sure that it's doing just triggering once when it should do. Want it to trigger on ADRs. Need to test that functionality live. I need to be pressing buttons to test that functionality and just give it a good road test live. So I need to forward test it. Usually I do that for 2 weeks. Assuming nothing goes wrong in that 2 weeks, then yeah, it'll be ready to go. So yeah, but it's still got more coding. I haven't finished it yet. So put it back up again. So NASDAQ, but yeah, I mean, assuming it all goes to plan, I should have the coding finished next week. So I should hopefully have it live testing by end of next week. So that candle there, we want to see that hold and ideally break to the downside. S&P's testing higher day. Yeah, and they're holding this level. Should have taken the break even, I think, maybe on this. Opinion on the DAX? DAX is done. DAX, I mean, at the moment it's dropping. I'm out of the DAX, but it'll do whatever the US indices do because it's European session's done. So. Okay, so we've got inside bar on the NASDAQ. Try to rally. So I'm going to re-hedge here. If we break the highs, I'm going to re-hedge, and then I will look to get out when we get some signs of weakness, and I'll probably add another short if we get up to there, and then try and get a break even on it today. But still a good chance that we might put in a lower high here. But equally, this is potentially that. I haven't got anything on Telegram, Brian. Not coming through. There it is. No, bad fingers again. It's got little stubby fingers, look. Funny ring finger, isn't it? Well, I mean, he's covered in oil. Close. Close. He's in a gold suit. He has got what could be oil on him. Could also be jam. Or tar. Yeah, it's all right, that one. Fair to middling. O'clock. Right. This looks like it might be putting another leg in to the upside. So S&P, new high of the day. Now stuck. So just watching these, this high, basically. So looking for this rejection to the upside to hold. If that holds, we should be okay. But this is looking like it's rallying at the minute. So just watching this area here, which is where we sold from. And obviously we know we bought here, added again. So there's still buyers in the market. It all depends how many sellers there are. So it's all to do with volume, isn't it? At the end of the day, if there's 100 million coming in short and there's 50 million going long, we're going down. When you start fully using the new EA, how will you manage putting that on the charts while managing open positions? I'll start a new account. I'm not going to stop trading the market reversal alerts, EA. It's a proven strategy. I've been trading for nearly 5 years. I'm not going to stop. Pays the bills. This is just another EA that is going to help me trade manual strategies, but equally it will also trade H1M5 ADR reversals as well. Trying to get that last little bit of orders before heading to the pub. Yeah, they are. We might well just peter out here. So we'll see. We're an hour and a half into the session, so that could be higher day. And if it is, obviously, there's nowhere else to go. So we'll have to wait and see. But the S&P has just made a new high, but not very convincingly, as you can see. So, and they are running straight into the pre-market high and yesterday's high. So obviously the pre-market high today is yesterday's high. So they basically hit yesterday's high today, and the limit orders triggered. Didn't let it through, and then obviously the news kicked it down. So we've undone the news, and we're in a bull run. So it could well easily break out these highs today, but it is Friday afternoon, so it might well just stall out. We will see in the next half an hour. Is it my personal perception, or is the Forex market sideways? Yes. It is totally sideways at the moment. We're waiting for the interest rates to move, basically. So the only thing that is going to affect us short term is bank short-term movement. So the markets are just waiting to see who's going to press the button first. And until that happens, we are likely to do that. Just go sideways. So there's no reason to do anything else at the moment. There's no advantage in any currency. The US got its biggest kick for 3 months today with that unemployment rate, and the reason for that is because Powell said on Wednesday, we will drop the interest rates if unemployment ticks up. That is our main focus. Unemployment stayed stable rather than ticking up. So that is bullish US. So this is the biggest bullish news we've had on the US for ages. However, it's a very, very short-term thing, because what he said is we will put the rates up in May. We will drop the rates in May, but we'll do it sooner if that changes. So this hasn't changed anything. All it's done is confirm May, which is bearish. So it's just confirmed that in 4 months, we're dropping interest rates. US dollars coming down. So, but obviously that's 4 months away. So we could well have a drop for a couple of months where the US dollar rallies like crazy. But every piece of negative news is going to drop it back down again. So it's all going to be very news driven, but it has been news driven for the last 2 months, which is why we've gone sideways, because we get good news, we rally, we get bad news, we drop. We get good news, we rally, we get bad news, we drop. There's no bias to show we should be going one way or the other. So all we're doing is reacting to good and bad news, which is what happens all the time. We get good news, we get bad news, we get good news, we get bad news. Swiss yen H4 sideways. Yeah. All the yens are sideways because we're waiting for the yen. Again, you know, the Bank of Japan have said that they are going to increase their interest rates to 0 from negative 0.1, which we've been at for 7 years. Okay, we'll wait. When you do it, we'll buy the crap out of the yen. You're not doing it, we won't buy the crap out of the yen. The Swiss will push, the Swiss will pull, the Swiss will push. The yen's doing nothing. So all that's happening is the Swissy is either dropping or rallying. The yen has got no influence whatsoever at the moment. Just stuck. Everything. You know, it's not. You know, this market is really stuck at the moment, which isn't a bad thing because, you know, it's so easy to make money in this market. It's just it takes a lot longer because the moves take longer. To get from here to here takes twice as long as normal. So it's easy to make money with very small drawdown, but it takes a lot longer, which costs you more. So it's a different trading condition to what we're used to. It's just harder. But, you know, 3 weeks sideways. News, sideways. News, sideways. News, sideways. Just, you know, it's just stuck. Grindy crap for weeks. Sideways for weeks. It will come to life. It's starting to pick up. I get the feeling it just feels like it's starting to get somewhere now. But I kind of got that feeling in January as well, and it just didn't happen. Oh, come on, NASDAQ. Things to do. Okay, so we're holding the highs. S&P's rejecting the highs. So I think we're going to come and retest. So I should be able to get out of this NASDAQ. But it's not gone anywhere for half an hour, so we'll see. Wonder how many IPTA traders got their butts handed to them today. Yep. I should imagine most of them. They get handed their butts pretty much every day or every week, and yet they still keep doing it for some reason. Follow the IPTA. Love it. There's no ICT traders in here, is it? This is why I'm not very popular. Because I don't trade ICT. That's what it is, isn't it? Personally, I'll be moving to the new EA since it can already take H1M5 and I can take manuals. Yeah. You can do that, but you won't be using market reversal alerts on it. So as long as you're happy to move away from market reversal alerts, that's fine. But there'll be entries which are very similar in level, but it won't be... Matt, me. You trade ICT, do you? So sorry. If you want to learn how to make money, come onto the website here and go do the position trading bootcamp. It's all free, but it will teach you how to move away from ICT and actually start making 120, 150% return a year. A la that. And that. And that. But if you trade ICT, you probably look like that. Well, you do look like that. Because you're in here. If you're trading ICT, you wouldn't be in it. If you're making money with ICT, you wouldn't be in it. Can you explain how price was being manipulated through MQL with that prop firm? I don't know. I don't know. But basically, with MQL, well, with MetaTrader, with MetaQuotes. Basically, you have a license. As a broker, you license the software. And basically, as a broker, you run an MQL server, MetaQuotes server, which quotes all your prices. So your prices come in, they get quoted out through the server. So the server serves all of our terminals. Yeah. So if you wanted to, you could put your own prices into that server and serve that out. Yeah. Nothing to stop that happening. There's obviously regulators and regulations with brokers, which means that you have to be authorized by the Financial Conduct Authority or whatever country you're operating in, their regulatory body, to make sure that you don't rip everybody off and con everybody. There is no regulation in prop. So if I wanted to start my prop firm up tomorrow, I could say, hi, MetaTrader, I would like to buy some licenses for you. I am running a brokerage and I'm using the brokerage data from IC Markets. And they'll go, okay, no problem. And then I will go, nah, I'm not. I'm using my own. And I can manipulate price however I like, because it's just a server serving data to a terminal, which interprets that as a candlestick. That's what they were doing at my Forex funds. And suddenly, True Forex funds, or whichever one it was, has now done the same thing. I don't know if that's what's happened, but that is how the systems work. It's all open for manipulation. So, I don't know, but whatever it is, they've had their license pulled by MetaQuotes. MetaQuotes aren't going to do that for any other reason than there's something not right. Yeah. They spend an awful lot of money with MetaQuotes. It's not, as a customer, MetaTrader, they're not MetaQuotes software. They're not going to turn around and go, you pay us 25 grand a year for our software. We don't want you to have it anymore. We don't want your 25 grand. There's a reason they've got to pull the software. I suspect higher up is going, they're not a licensed broker. Please don't give your software to them. We're about to investigate them and nick them. It's possibly what's happening. I don't know. But it could be that. I don't know. End of the day, it's another prop firm. Gone. Just be very careful with them. All out there to make money, not to help you. This is turning into a pain in the backside. You good? We don't need ICT. No, you don't need ICT. Not totally ICT, bits and bobs from his concepts. Still ICT. What are the trigger options for H1M5? I don't know yet. At the moment, it's a moving average crossover. I'm going to put some kind of reversal alert-ish type thing in there. I haven't decided. At the end of the day, what I've got operating at the moment is just moving average cross, just so that I can test functionality. Doesn't matter what the signal is, does it? I can program a million signals. I just want to check the functionality of everything working. If I go and do back tests and it all works with a moving average cross, I'll use a moving average cross. I don't care. At the end of the day, like I say, it doesn't matter. If you wait for a reversal alert, you might miss an entry because it's too close to the previous one. If you took a moving average cross, you'll get into it. Sometimes if you take a moving average cross, it won't give you a reversal alert and it'll bounce back out, and you shouldn't have taken a moving average cross. There is no advantage to any signal in the market. Every time you take an entry, it's a 50-50 shot. Which one you use is irrelevant. What I'm looking for is kind of tighter entries, which is why I'm using moving average initially, just to test the EA. But literally, if we make a new high, stick a line in. If it crosses that line, that's a market reversal alert, isn't it? So I can program that into it as well. I could use a bullish and a bearish engulfing, a 3-bar reversal. There's 1,000 things I could use. But at the end of the day, I just want simplicity. Just want it to scale into positions for me. And I don't really care if it's 10 pips higher or lower than any other level. It's just an entry. It either will go my way because the market will move it, or it won't go my way. And if it doesn't, I need to scale in. So I don't care. Honestly, couldn't give a monkey's how it gets in. It doesn't matter, does it? It's either going to go there. This trade is going to go down or it's going to go up. Why did I get out of it? Doesn't matter. if I was waiting for a market reversal alert, I would have got out here. Could have got out there. I didn't. I just got out because I saw a wick. So I could use, if there's a long wick candle and a small body, use that as an entry signal. Still got the same odds. Details. Not really. Is it possible for the position trading EA that you test at the moment to add 2 time frames? No. I need it. I'm not building this for you. I'm building it for me to trade how I trade, because how I trade makes 6 figures a year. The problem with the market reversal alerts EA is people kept saying, can you do this? Can you do that? Can you do the other? Then you got 30,000 lines of code and it doesn't work and no one can understand what it does. I'm not doing that. I've built that already. If you want that functionality, the market reversal alerts EA does it already. Go and use that. This isn't that. The whole purpose is I'm not doing it for people. I'm doing, this is going to do what I want it to do. If you don't like it, build your own. In the nicest possible way. But, okay, hedged again. Fridays. I've had Fridays. I'm taking Fridays off from now on. So, going ADR. Which is high of the week to the upside, and then I will get out and re-hedge if necessary there. So I'm going to take a third. I'm going to get out of the longs there, take a third short. So we'll get in with another one there, and then obviously re-hedge if necessary. But it's not stopping, is it? So got to assume that we're going to go and retest those highs. S&P carrying on, Dow carrying on. So Dow, I am going to get out the Dow by the looks of things as well. So if that NASDAQ carries on and the S&P carries on, the Dow is going to be an exit, and obviously I'll try and aggressive on that. I wanted to go out now, but I don't think I can. I'm not going to leave these. So I'm just going to have to watch these for this afternoon, which is really annoying. I'll go out later. Maybe you're not popular because you didn't show up with your Lamborghini. Yeah, exactly. I wonder what ICT drives. Never shown his car, has he? MFF boss sent a text instruction saying to employees, slip him to hell regarding a profitable trader. Yeah. Exactly. So if you are using a third-party broker feed, you cannot slip him to hell because you're not in control of price. This is the problem. Yeah, if I'm trading now, right, and I can see this, I'm the broker now. I can see this, right? I know that you're going to get out with a profit there. So what I'm going to do is move it down to here. Yeah, because then you're not going to hit your target. I can do that because I'm in control of the price. But the problem is you've got to stay close to quoted price, otherwise it looks obvious. But what you can do is when I say buy here, you can place my buy order here, which means I miss all of that profit, which screws me. That's what slippage is, isn't it? So there's many, many ways you can do all sorts of things. But at the end of the day, another one caught for something, isn't it? You don't just get your license pulled by your software broker because you're doing a good job. Don't know what it is, but whatever it is, it's another one bites the dust, isn't it? Any reversal type pattern is good. Yeah, doesn't matter how you get in. It's the condition we're trading. Yeah, so we're trading RSI extension, we're trading ADR extension. It either works, and if it doesn't work, we DCA in, move our price, and wait. How you get in is less important than whether or not the market comes your direction. So it doesn't really matter, does it? GU, back down, just back down. Just back down again. Back down to support. Good looking long. ADR reversal. Fail. Take a second off that low. 5-minute reversal alert. So good looking level coming up. Or we're at there. We've had the 5-minute reversal, haven't we? So we're retesting now. So this is potentially your W reversal back up into propulsion. I just get the feeling we're going to undo all of this. This is all we're doing at the minute, isn't it? So Monday, Tuesday next week, we'll be back up there. And all the yen pairs will be back down again. So I'll be adding another yen on short. You know, we'll just be back down again down here. We have put a new high in though, but literally only just, and we're rejecting, aren't we? So if this pulls back from here, this is just a double top to come back down again. It's impossible to tell where anything's going at the moment. It really is, isn't it? The high and low ADR lines really close together. Pound US, yeah, there will be. Big ADR move, isn't it? So ADR high is 100% of ADR from the low. ADR low is 100% of ADR from the high. If it pushes down 200%, the high will cross the low. 100 plus 100. 200. There you go. US dollar Swiss targeting 200 ADR. So if we look at the US dollar Swiss, the lines will have crossed if we've hit 200. Not quite. Yeah, but look. Yeah. ADR high, ADR low. That pushes up to there. That will get pulled up to there. Those two lines will be exactly the same because it's moved 200% of ADR. Therefore, the 100% will be crossing the other 100. I get so many messages about this. My ADR indicator is broken. Why is that line above that line? Because it's moved up by twice as much as the measurement. It's just what it does. Not broken. It's just telling you, holy crap, that's a big move. I better stay out of that. Or, holy crap, that's a big move. I'm jumping on board. It's just measuring distance. That's all it's doing. Nothing clever. Liquidity drives the market at the moment. They're seeking for this. Well, yeah. They're just placing orders at the moment, aren't they? Aren't the ADR lines an average of 10 days? Yeah. So it's the ADR is 63. So on average, over the last 10 days, price has moved 63 pips during the day, on average, up or down. From high to low, the average is 63. So from that high there to that line there is 63 pips. From that low there to that line there, the average is 63 pips. Right, I'm going to have to go. I have to take my phone with me. Yeah. Right, so S&P, I'm flat. Dow, I'm approaching target. NASDAQ, rehedged, and I will be getting out at ADR, and then I will take another short. So I'm just going to monitor this one on my mobile while I'm out, and when I hit that target, as soon as I see some bear price action, I shall short it again. And then obviously rehedge it if it goes long. So not much we can do with this one today. It's eating up all the day's profit. But if it does pull back, and hopefully we just get that rally and some kind of pullback, I'll be able to get out and I'll take a break even on it, I think. Because if that one can pull back, that will make a profit. That's made a profit. FTSE's made a profit. DAX is break even. So just need to deal with the NASDAQ today. Just want it to pull back a little bit. So I'll be back on Monday, same time as usual. 7:50 for Frankfurt, 2:20 for New York session. We'll have a look at the markets next week and obviously see what we're doing. But obviously this US dollar move at the moment isn't stopping. So we'll get some kind of pullback on this next week. All these big moves, we always get some kind of pullback into the propulsion area. So we'll see where we go from this one. So we'll be looking to come and retest this propulsion gap potentially. However, it's not going to go like that. It's going to hopefully use market structure to get there if it is. Other than that, we'll find out Monday, Tuesday. We're literally just back down to here again. So this is either a fake move, and those unemployment figures will be squashed by negative news next week, of which we have quite a bit. But it's mainly, well, I haven't actually got a lot. We've got Powell speaking on Monday, but basically it's the PMIs. So if we get negative PMIs on Monday, they'll undo the whole lot of this. We've got the Aussie rates coming out next week. We've got unemployment claims for the US. We've got the CAD employment rate, which will drive the US dollar as well. We've got the New Zealand rates as well coming out. So there's loads of news next week, which is fairly decent, and it's spread throughout the whole week. So there's lots of movement opportunities next week. So we'll see. But yeah, at the moment, it's not putting the brakes on. So, which is waiting for some kind of reaction. So those ADRs that have hit today, I'm in 4 now. US dollar Swiss, pound US, Aussie US, and US CAD. So I've got 4 of those on. So looking for the mean reversions on them. Pullbacks, basically, next week. All right, so have a good one. Anything you need, let me know. I'll be in Telegram. Other than that, I'll be back Monday, 7:50, 2:20 as usual. And have a good weekend. I will see you guys Monday.